Okay, this is the first time that I've actually tried this through our presentation software, so I hope that this goes well and I hope there's no glitches. But it's my pleasure to be able to provide some insight and hopefully some clarity to bring to you, your clients, and the communities that you serve through a little recap of the market update that occurred this morning at Synergy. So, without further ado, let's dive right in. Let's take a look at the market snapshot. To start, new listings are up 29.7%, which is a leap from last month, but still, contingency contracts make up almost 25% of that number. And the list to sold ratio is up to nearly the same level that it was in October of last year, which is a sign of price stability. Now, switch over to closed sales. They are up 19.2% from this time last year. And pending sales, while they're down 6.3%, pending sales are trending in a positive direction compared with last month's 10% decline. And if we remember back in April, that 40% cliff that the pending sales dove off of, pending sales are still down from where they were last year. However, if we're looking at momentum, things are coming back up to levels that they were in previous years. Days on market still hovers between somewhere around 60 to 70 days. 65 is the number if you look at it as of the 10th of June, yesterday. But if you look at sold properties, that average days on market is 49 across all price points. So while inventory is rising, now we're seeing good inventory still selling at a proper pace. It's worthwhile to look at that. Let's pull back in why we say that month over month data gives us momentum, year over year data gives us trends. So let's look right here at this graph from Housing Wire through Altos Research, which is probably one of the most reliable, dependable, and accurate sources of information for nationwide numbers. Let's look at these longer term trends and let's see how this year and the things that we're currently experiencing stack up against years in the past. You can look here at inventory in terms of 2025 is 32% more than last year. But if you look at the trend line graphs from 2024, 2023, 2022, 2021, take 2020 out of it. Remember, we've all talked about the unicorn year, right? Correct. Even 2019, that's that big light gray number at the top of that graph. So we can see that while inventory is still 32% more than it was last year in 2024 at the same time, still look that we are wide in terms of our delta or our gap between where inventory levels were even in 2019. And we can all agree that 2019, we were not standing around going, oh my gosh, there's too many houses to sell, too much inventory, not enough demand. So when you think about the context of the prior market snapshot, when we go back here, how new listings are up 29.7, pending sales are down, days on market are creeping up. We still have to look at where we've come from and that trough that not just Greenville, but the whole entire country has had to dig itself out of in regards to inventory. So let's keep that moving with new listings. They are following the same cycle. Note in 2024, you look over in 2024, which is the bright red plot graph, you can see where inventory levels bounce in a low point right in line with an election year cycle. Right in line with that, but still higher than 2022, higher than 2023, and 2024 still not quite 2022. And we thought we had an inventory shortage in 2022. So I just want everybody to see how when you peel that layer back from month over month or current data, look at how those trend lines have worked over the last three, call it 2.5, 3 years. Keeping on going with that, let's look at percent of properties with recent price reductions. This is the earliest in the year we've gotten to this percentage in the last 5 years. However, I'm hopeful that that curve is going to act a lot like 2023 and 2024 in that that line will flatten at the middle part of the year. Price cuts are at 39% right now. But when you think about the fact that the amount of inventory that is available and those longer days on market, properties are going to be more likely to receive a price reduction. Total pending home sales, that's going to be a little bit more of the same. You're going to see all of these 4 years of time represented here. This is following seasonality. I do feel as if we have peaked, but I would not be surprised if we see a little late summer bump. Just because there are more homes on the market, there's the possibility for rate adjustments. But again, even if there isn't, this trend line in 2025 is following the same seasonal pattern that it always does. So let's put our finger on the pulse. We've seen a little bit of it, but now let's look a little bit deeper. Seller outlook does remain positive, but in some sectors of the marketplace, an extremely high probability in some condominium or townhome markets, a buyer's market may already be here. This is more important than just about ever, and I don't mean to say that in a cliche way, more important than just about ever, that we really take stock of the individual situation of the person, people, client, marketplace, sector of the marketplace, product type, everything involved with it. We need to take stock of what's actually happening in the specific market of the need of the client that I'm trying to serve, because a buyer's market may already be here, even though a buyer's market isn't available in every sector of the market. And last but not least, the seasonal peak for pendings has arrived. We already talked about price reductions, and over 44% of the listings that have been on the market for at least 30 days. So over 44% of the listings that are active right now have been on the market at least 60 days. 39% of those listings have had at least one price reduction. That was the graph I referred to earlier. But of those, 76% have had more than one reduction. Redfin is also saying that buyers outnumber sellers 1.9 million to 1.6 million, which is the largest gap in 9 years. The condo market, that number is even wider. So when I say a buyer's market may already be here, just because sellers outnumber buyers in the marketplace does not mean it's a buyer's market. It just means that there are more listings than there are people actively pursuing purchasing real estate. There's other people that are on the sidelines that are there that just aren't being represented. And again, like I said, with seasonal peak for pendings, I wouldn't be shocked by a late summer bounce, but given seasonality, I would not bank on it. No pun intended, unless the Federal Reserve does something about rates, which I do feel would be the linchpin in adding some invigoration into the buy side of the real estate market. And you look at it from this way. Mortgage applications are up 18% from this time last year. If those jobless claims, now granted, job market and the job market numbers are not available yet, but the inflation figures came in at 2.4%, exactly on target, the way that the Fed wanted them to in terms of inflation. However, even with that, other factors involved, you could see Jay Powell forced to lower rates from the Federal Reserve. And I really view that as the shot in the arm that both buyers and sellers need. Overall, listings are remaining fairly steady if you really count into the fact that there is a lot of contingency contracts involved with the current active listings, even though pendings are down. So that means that the market is holding the way that it was, and it's not going outside of where things typically trend during this part of the year. All that to say, what do I do with all this? You have a lot of statistics and a lot of numbers in front of you and a lot of good information that you can help peel back the onion for your clients and your customers and your communities, the people that you're having a daily conversation with. Now, what do I go do with that? Well, first and foremost, this is the time of the year where most socializing really occurs outside of the big holidays. You know, whether it's vacation, lots of time spent with family and friends, you name it. Now is the best time to use your time wisely. And the number one thing that can help you move the needle forward and be a positive impact is to ask Ford questions in your day-to-day conversations. Ford questions, what are they? Most of you know this that have gone through Ninja, but for those of you that this might be something new, it is questions that revolve around your family, your occupation, your recreation, what you do for fun, and your dreams. Listening for changes and growing your warm list is what is really going to help you have a productive summer and therefore a productive fall, winter, and into 2026 within your real estate career. Ask more Ford questions and do this on purpose. The goal here is to listen for those changes, grow your warm list, and then review everybody in your database and update them, add them if you need to, and put notes in there regarding those forward conversations. The third thing that you can do to really set yourself up for success coming out of summer is to utilize your backyard. That's where the geographic farm comes into play. If knocking on doors or direct mail isn't for you, then at least send them something to ask to sign up for any sort of communication. I don't know, perhaps if you wanted to add the Foothills Living newsletter to each of those members of your database that you've touched base with and said, hey, listen, I've got this newsletter that comes out on a regular basis. I can just add that to you. Would that be something that you might be interested in? Tell me what you think about it. And it gives you, one, the opportunity to ask them for some updated information, but two, it gives you another point of contact so you can follow up after that goes out and say, hey, what do you think about that? Do you want to stay on there? Is this something that you find valuable? Or is it something that you want me to take you back off of? Your backyard. Utilize your backyard. The next one, number 4, give thanks. Patronize the businesses and patronize the businesses that you already use on a regular basis. Think, where do I go get lunch? Where do I like to get my nails done, my hair done? Where do I take my car? Who are the people that I utilize for dry cleaning? Even anywhere. Those folks live somewhere too. And if you have a pre-existing relationship with them from a consumer standpoint, maybe it's a good time for you to be able to dig a little bit deeper and showcase your value by, one, asking Ford questions, adding them to to your database if they already aren't, talking about the newsletter, giving thanks by giving or getting gift cards to be able to show appreciation to other people, but also letting the folks know that you're getting the gift card or giving them business or sending them business their way, that you are the one that's going to do that. And here's why I'm doing this. I'm giving thanks by showing some love to the people that I already spend my dollars with. Have Ford conversations with those people. I guarantee you, if you start to do that with the people that you're already doing business with, but on a very surface level, if you go just an inch beneath the surface, I do believe firmly that you're going to have a lot of success with that strategy. Finally, and I will continue to beat this dead horse until it is dead, decrepit, pulverized powder, unsolicited CMAs. I want to ask everybody a question that's watching this. Have you done some? And if so, how many? And if you have done them, what was the success ratio? At least to not have somebody say, oh, this is ridiculous. Don't ever contact me ever again. Until everybody gives this at least a try for 30 to 60 days of 1 or 2 a week, unsolicited CMAs with this imperative attached to it. You deserve to know where you stand with your largest asset. Ford questions, database review, your geographic farm, own your backyard, give thanks to the people that you already do business with, and do me a favor and make it a goal for the next month or 2 months till we get out of summer to send as many unsolicited CMAs as you can feasibly handle, with the imperative to say you deserve to know where you stand with your largest asset. Why do I do this every month? It's because most agents know what's happening. good agents understand what's happening, but only great agents can explain what's happening. Let's go out there and make this the summer to remember that sets you up for a fall that actually puts dollars in your bank account and keys in people's hands. You guys have a wonderful day, and I look forward to doing this again next month.